Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. It's been a volatile start to the September series. Markets are swinging between gains and losses. The Nifty trades around the 10,950 mark. The Finance Secretary is meeting heads of 10 public sector banks ahead of an announcement on a mega state-run bank merger plan, says a government official. Hindalco is off the day's high but remains among the top Nifty gainers. Reuters report that the European Commission is set to give its nod to the $2.6 billion Novelis-Aleris deal. And India's GDP growth is expected to slow down further to 5.7% in the first quarter of this fiscal, according to a Bloomberg poll. Good afternoon, Devina. It's been a volatile start to the September series. We've already gyrated, I guess, 150 points in Nifty.
We have, and we're still in the positive territory, so probably that's the silver lining. But the more important bit is going to be the focus on 10 PSU banks this afternoon. You know, there could be a possibility of some announcements coming in from the finance minister with regards to the merger plans for these 10 PSUs. We're joined right now by Siddharth. He's here to take us through what is anticipated right now from this particular meeting. Siddharth, over to you.
See, basically, what comes out of the meeting is already been planned in detail. I think there will just be the formalities which would be completed with these 10 PSU bank heads. And the finance minister is going to brief on the details of the merger plan at around 4 o'clock. And what I can tell you at this stage that it will be a big consolidation of large number of banks. So after the consolidation, we can expect the number of PSU banks will definitely go down in a big way.
Any conversations with regards to, we had this in September where there were 3 banks that were merged together. Any details in terms of the contours of the merger with these 10 banks?
No, basically what you can easily make out is there would be something emanating from among the 10 banks which have been called for the meeting. So, and all that is known. Basically, the banks which are participating in the meeting are Punjab National Bank. Among the big banks, then the Union Bank is there, then we have Canara Bank, then we have the smaller banks. So obviously, it will be some big banks taking over those small banks.
All right, so thanks very much for joining us. First heads up there that's coming in. You will see the announcement of that if it happens quite shortly, probably around 4-ish is when the FM is expected to make some announcements. But all of the PSU banks ahead of that have seen an uptick in today's session. We'll come to that in a bit and take you through that. But for the Nifty 50, this is what you've got. You've managed to break back into the green, about 0.25% higher right now, 10,973. Had a bigger open, but then saw that blip coming in towards the mid-afternoon session, but we've picked up from the lows of the day, so looks promising enough. Taking you through the Bank Nifty moves before we go on to the heat map and tell you what's moving there, and this is what the Bank Nifty looks like, 91 odd points higher, so 1/3% gain there too, and a very similar chart pattern for the Nifty Bank as well. Individual stocks and how they're moving about on the index. The heat map should come up next, and we'll tell you what exactly is contributing on the upside and the downside. So on the upside, you've got metals as a pocket that's doing relatively well compared to the rest of the space. So in all these days when you've seen a lot of selling pressure building up on stocks like JSW, Steel, Vedanta, today seems to be a little bit of a reversal. So Vedanta is your top gainer, 3.25% higher. Sun Pharma does well. Z, remember, SL Group has sold some of its solar power units as well. Tata Steel, ITC, Hindalco, JSW Steel. So at least in the top 10, you've got quite a few metal names. Coming down to your losers, Bharti Infra. Yesterday's session was the top gainer. In today's session is the top loser. Power Grid, Coal India, ONGC, NTPC, and Eicher Motors down about 2.5%. So auto as a pocket. Remember, we've been talking about how August as a month could not be any different in terms of the auto sales numbers, but we'll have to wait and watch. But ahead of that, at least, there seems to be more weakness. And Coal India continues to reel under pressure by about 3.5%.
Okay, so that's the market check for you. But before we proceed and give you more details about that, let's address a stock which is in focus. L&T is the stock which is in focus after its power business won a large order from THDC India. Let's get you more details on that order win from Mr. S.N. Roy, the whole-time director of L&T Power. Mr. Roy, good afternoon and thanks a lot for joining us today. Could you give us more details about the order that you've...
This is 2 into 660 megawatt Khurja Super Thermal Power Project in Bulandshahr, UP. And the first unit is to be commissioned in 46 months from yesterday. we got last night this order, and the second unit in 52 months from yesterday. This is one of the fastest plant to be awarded. I think in March, Honorable Prime Minister Modi ji laid the foundation stone of two plants. One Buxar in Bihar, which we have gotten. We are about a month back and we are executing. And this is the second plant which the foundation stone was laid. And this is one of the fastest order finalization which has been done by the government.
Okay, Mr.
This is, yeah, sorry.
Go ahead,
yeah.
please complete your point.
Yeah. What I was telling is that power in a scenario last year, we didn't have any orders. Only one order of Sagar Digi was given. I think the backlog has to be cleared, and very fast the government should decide in placement of future orders, which are 3-4 in the pipeline. So that with a GDP growth of 7+%, which is being forecasted now, we will have some industries coming in, and power will be required over a period of time, and we should not face a situation where there will be power shortage when industry, which will be power guzzlers like steel plant and refineries and petrochemicals and fertilizer plant, which will be coming, they should have adequate power available in the grid.
Mr. Roy, if you could just give us a sense as to what sort of margins you would be garnering from this order win of 2,500 to 5,000 crore that you've stated?
Yeah, this is a question which everyone asks as to what margins. We have just got the order. We hope to get good margins, and the margin will be commensurating to L&T margins as in past. So I won't be able to forecast the margins as of now.
Okay, and are you looking for any more orders? Are you expecting any more orders in the near term?
In the near term, there are 2-3 projects on the anvil, which is the process, and within 3-4 months, they are going to be finalized. One is Lara and Singrauli from NTPC.
All right. Mr. Roy, just one last question before we wrap up this interview. With regards to, obviously, this is categorized as one of the larger orders that, has come your way. If you were to give us a slight bit of a color in terms of the kind of order inquiries and the kind of orders that you are bidding in for, in terms of categories, how the quantum of smaller orders, are they more for you to grab, or the larger orders that you're bidding for are more easily available to you? Could you just give us some flavor on that?
I will give you a rough ballpark figure. There are 2 projects, Lara and Singrauli, which will have a figure of about 20,000 crores in power sector. And small orders on FGD, that is the reduction of SOx and NOx on the older power stations, which is there on the anvil, which will be in the vicinity of 15,000 to 18,000 crores. So that is a quick review of power scenario which is going to come.
This is for the rest of the year, the entire year?
Yeah, the rest of the year, yeah.
All right, got that. Mr. Roy, thanks very much for joining us. A quick update there on the order win that they have had, the joint venture there, and in the large order category for them, so between 2,500 to about 5,000. Not yet being able to give any color in terms of the kind of margins that they'll get from this particular order. But back to the markets then, and taking a look at what's been happening. We've spoken about how the markets have remained relatively stable, but also the fact that today is the first day of the new futures and options series for the month of September. Last month was disappointing, Navneet. We step into the new series. How's the setup looking like?
Well, 3 straight series of losses is something which we've already seen, and for a long time you've not seen such a volatile day 1 to the new series. The Nifty's already gyrated almost 150 points. We did breach the 10,900 mark in trade, but from thereabouts we've recovered, and the day's high was also somewhere about 11,024. So for the futures, of course, there is some increase seen considering it's day 1. So the open interest is up about 5.5%. Remember, we're starting the September series in line. The open interest was in line what we've seen for the August series as well, and the futures are currently at 11,011 points. For Bank Nifty, let's pull up that one, which was down 6% in the August series. Of course, there is more interest seen on the Bank Nifty front right now. Open interest is up 13%, indicating there are some positions being taken here. But as I mentioned, it's been a volatile day. India VIX has also gyrated a lot. So currently, it is at levels of about 16.6 after rising 30 30% for the August series. Very quickly on the options front, your maximum open interest for the next weekly expiry on Thursday is at 11,000 call, and on the put side it is at 10,900 and 11,000. So we're expecting a very, very narrow range when you look at these concentration at various strikes. But in today's session particularly, we've seen more of call riding at the 11,000 call, which has seen addition of nearly 12 lakh shares, whereas maximum addition on the put side has been seen at 10,900. I think on closing basis 10,900 will be important to monitor today, which we already breached once. Stock futures, MCX continues to do well. Fresh 52-week high today, up 15% so far this week. Long position seen on the future side. Manappuram Finance has been weak. Not only that, I think today it slipped below the 100-day moving average, but the stock overall has been an outperformer this calendar year, up 27%, 19% higher when it comes to open interest. So shorting seen for Manappuram. Lastly, just want to highlight SBI. The stock's down for the third straight day. It also trades below its 200-day moving average now, and fresh shorting has been seen in today's trade as the stock is trading with cuts of about nearly 1.5%.
Let's begin with the market voice. Nilesh Shetty of Quantum Mutual Fund joins us right now on the show. Nilesh, good afternoon. Thanks so much for speaking to us at Bloomberg Quint. What is it that you're doing right now? There is a slew of announcements that the government is making to try and boost sentiment, maybe some reforms, etc. But the larger will of money doesn't seem to be in favor. Are you deploying money? Are you sitting on some bit of cash, or are you aggressively buying?
Yeah, so selectively we've got opportunity to deploy cash. I mean, our cash levels were as high as sort of 15%. Given that the correction has not been uniform, you have had pockets of opportunity emerge. So we did allocate to the NBFC sector when they corrected sharply after IL&FS, and recently more in the auto space after you've had a significant correction given weak numbers. But again, our cash levels still remain elevated, still remains about 13-14%, which is much higher than our historical averages. If the markets were to continue to correct, then and we are happy to buy, given that we are long-term investors. Right now, again, despite the correction, you don't get that many opportunities, barring select pockets in auto and NBFC. Excluding that, you're not getting that many opportunities. So we wait and watch. If the markets were to correct, we'll be happy to buy into the market.
Right. Today, metals seem to be extremely active in relation. This has been a pocket that's probably been sidelined. Even when we made those record highs, there was not much of, of the pie that went to the metals pocket. But do you see that cycle changing now? But also keeping in mind the backdrop of the trade wars.
Yeah, sort of in the metals, there really are very few quality players. I mean, and you really are dependent on sort of what's happening in China. We really just have a small allocation there to a very highly cost-efficient player who we think will survive sort of whatever happens cyclically in the sector. But by and large, we've sort of avoided that sector, and we still do not see many opportunities there for us to deploy sort of our cash.
Nilesh, you mentioned you're sitting at 13 to 14% cash levels, which is actually on the higher side. So when you start deploying at lower levels, how much correction or what's the support that you foresee for the markets? You also highlighted only autos and NBFCs giving opportunity, but are you finding value there, considering now there is so much of chatter that auto is witnessing a structural slowdown and not a cyclical one?
Yeah, I mean, the slowdown essentially got triggered because of some regulatory changes which drove up cost for the end product, and second, the credit crunch that hit the sector post IL&FS. The crunch is not necessarily for you to finance automobiles, but essentially a lot of the demand that was being created by financing sort of loan against property and other products. I mean, people who are dependent on that for their working capital financing is what we understand is sort of impacted after the IL&FS event, which is impacting end demand for consumer discretionary in general. But again, both these factors are essentially cyclical in nature. They do not alter the structural story in auto, which is essentially low penetration across categories. I mean, be it four-wheeler or two-wheeler. So we remain fairly bullish on the sector. For investors who are looking for to invest for the next 6 to 8 months or 12 months, perhaps it's not the time to invest. But people who are looking at sort of 3 to 5 year horizon, given where valuations are, it's very attractive if you're a long-term investor.
Okay, and where do you see the recovery coming by first? Will it be CVs, PVs or two-wheelers?
Yeah, again, CV unfortunately is just starting into a downturn. They've had 4-5 years of a strong upturn, and perhaps, I mean, irrespective of the general economic slowdown, it looked like the CV cycle will slow down after 4-5 years of very strong numbers. So we don't expect CVs to do really well sort of this year or next year. But general passenger vehicle sales and two-wheeler sales should show an uptick if things were to normalize in the economy. Till September, actually, both at least two-wheelers were reporting double-digit volume growth, and post ILNFS, things sort of dramatically fell off a cliff. So our sense is once things normalize and you have sort of catalysts in place, I mean, this year the monsoons have been fairly decent, and the festive season demand is coming up. In lieu of the fact that there are going to be regulatory changes on the emission norms, which is going to make products more expensive sort of next year, you should expect some preponement of demand, which hopefully should sort of improve the sentiments in the automobile space. So our primary bet is on sort of two-wheeler and sort of four-wheelers, where we should expect some uptick in demand.
Right. Nilesh, one last question with regards to PSU banks. Talks of big mergers being announced there. But would any of the banks be of any interest to you?
So we have SBI in the portfolio, but below that, what we observe is the quality of the management and government influence sort of tends to dramatically sort of destroy a lot of value in these banks. So again, merging two weak PSU banks or sort of getting two banks to merge is not a solution in that pack. The big problem is the owner and the kind of influence it wields on the lending capability of these banks and the risk assessment capability of these banks. Essentially, they are not able to do it in a free manner, which is what sort of destroys a lot of the book value in these companies and drives a lot of inefficiencies. So despite whatever sort of cosmetic changes are being planned, unless the owner reduces its influence in the bank and allows them to operate in a much more freer manner, we really sort of don't look at this pack.
We'll leave it at that. Nilesh, thanks very much for joining us. Appreciate you taking out the time. Now, while we're looking at the equity markets, also interesting to see what's been happening to other asset classes. And one particular asset class, which seems to be where all the money is going into right now as a safer haven investment, keeping in mind the uncertainty regarding growth, the more dovish central banks, rate cuts being announced, all of these factors kept in mind. Gold is one particular asset that seems to be, on an upward tear. And we've seen how global gold prices have moved past $1,500 per troy ounce. Domestically, MCX Gold has also hit that crucial 40,000 per 10-gram mark. Let's discuss what lies ahead for the precious metal with Kishore Narne of Motilal Oswal. He is joining us right now on the show. Kishore, thanks very much for taking out the time. What is the way forward now with regards to gold, and whether or not it looks slightly more toppish at around 40,000, and if you can enter even at these levels?
Good afternoon. I think we feel slightly the gold rally has seems to be slightly extended ahead of the current fundamentals which are visible right now. But we are not changing our view or a stance on gold, which remains bullish. But of course, we are looking for possible short-term corrections on the way. Either it could be a time-bound correction or maybe a price correction, which could be seeing, let's say, some $80 or $80 to $100 on international markets. Domestically, probably a couple of thousand rupees correction could be possible on the cards. So we are suggesting our clients to take a little bit of money off the table, or if you are trying to buy right now, probably you can wait for a month or so. Probably that's the time frame which we are looking at a correction could be effective. But the stance still remains positive, and we are suggesting to use dips to buy. So in domestic markets, probably anything close to 37,500, 37,300 should be good buying levels for the long-term investors. And
you see those levels coming in the next 1 month?
Probably. I think if at all it comes, it should be coming before October. So somewhere in the middle of the festive season. So because most of the media or most of the domestic investors try to keep asking that because the upcoming festive season suddenly causes a spike in gold demand, and why should prices come down festive season? But But actually what happens is domestic demand in India doesn't really play any important role of price making. And our demand has been one of the historically low in the last couple of months also. So our demand is not at all contributing anything to the price. So despite even if the demand has to revive from here, we need to see some kind of a correction. So I see that a couple of thousand correction from here will revive some demand in the festive season.
One last question from my side at least. What are the current CFTC positions, Kishore? Because up until now, there was some speculative longs taking, if we had to take a look at that angle of the market. Is it still holding strong?
It is. Actually, if you see in the last 6 months, what happened? So what happened was the speculative shorts. Actually, normally the gold market is never short. So what we have seen is, if you see early 2019 or late 2018, the speculative market has went into net short position. So from there, it started to cover up. So the cover up itself has been pushing up the gold prices rather than building up a long position. So short covering is one of the reasons. Second is the biggest reason for gold rally in the global markets is the central bank purchases. So large central banks like Russia, China has recently stopped purchasing, but I think they will still continue to diversify their reserves into gold. Turkish central bank, Indonesia, India. So a lot of central banks have been, that's been biggest buyer now. More than 600, 650 tons have been bought by central banks itself. So they have become the largest buyer in the market.
Quickly, Kishore, 37,000, when it comes to that level, you will buy for a medium-term target of what?
See, we are still maintaining our old targets of 42,000. We are still not raising them, but on record. But I think we can look at $1,800 on global markets, and if we peg somewhere rupee dollar at 74 also, probably because we are expecting rupee to depreciate much further if the trade war escalates further and Chinese yuan depreciates more. So I think if you're looking at a safe target of around 74 and $1,800, which will take to around 48,000 plus in India. But I think that's the number which probably the visibility will come maybe in the next quarter. But at this point of time, 42,000 looks much more possible.
All right. We'll leave it at that, Kishore. Thanks very much for joining us. Really appreciate you taking out the time. So, while equity markets are not doing a whole lot much, it seems like, your money can glitter with gold.
The yellow metal is shining, and how?
Yeah, well, so good going, at least from an Indian perspective, it's always great, right? The quantum of gold with Indians should make us
considering we are just generally hoarders of gold.
Precisely, and well, maybe for good reason, right? The grandmoms will say, see, I told you so. Anyways, but if gold is doing well, the question is, what about the other asset classes, equities in particular, and within equities, what do specific pockets look like? Is the auto slowdown cyclical or structural? We put that question to Sridhar Sevram of Enam Holdings on our special show, Navigating Through Uncertainty. Here is what he had to say.
It is not structural. So I take two-wheelers for example. It isn't as if EV is going to come tomorrow, and the government has anyway announced that they're not forcing anybody to, make the switch. And disruptions don't happen by force; they happen by choice.
Sure.
So if the choice of an EV is much better than that for a say normal vehicle, then the customer will do that. We saw that with smartphones versus a traditional phone, or with digital camera versus the old camera. So you don't have to do, or say messaging versus WhatsApp. You don't need to do much. It'll happen. But we do think that it is some time away. Possibly the first disruption will happen in the two-wheelers. But having said that, that's at least 3 to 4 years away, if not more. And both can coexist for a period. And then I think the customer will take an informed choice at that point of time. But at this time, we think it is cyclical. So maybe along with BS6, maybe the bottom, and then things move from there.
For suppliers as well, because there the price damage has been very severe.
Yeah, so the suppliers part look even more interesting, right? Because the damage is much more. And if this is only cyclical, then when the cycle turns, they will also benefit from the turn. So one has to be careful in seeing that what type of supply am I investing in. Do they significantly lose out when the transition happens to EV? Because not all suppliers, not everything is going to go to zero.
Yes.
So some of them look very interesting. See, one of the issues with autos was that they were trading consumer valuations, but they are actually discretionary because they go through a cycle. And the valuation differential between a staples and a discretionary is there because of a particular reason, which is the cycle. Unfortunately, we were trading at consumer staples valuations for a discretionary. So we were maybe 1 or 2 standard deviations over what they should. And now a lot of that has corrected. So where we are seeing that the long-term average, it is much lower. And many of them are cash-rich companies. I mean, they don't have any debt. They have brand. So that's an interesting space to look at.
Okay. What about, since you mentioned staples, what about that? A biscuit maker is saying that people are not buying. A soap maker has cut prices arguably by 20-30%, even if in a select SKU. But having said that, it has happened. And maybe we'll see more signs of this as well. Is there a worry on the valuation front, even if not on the growth front?
Yeah, so I personally am not a big fan of staples at the valuation that they are. I go back to 2009, which is when in my previous firm, we had taken a large position in staples at that time. We were coming out of the Lehman crisis and the market was gung-ho and all the cyclicals were flying. The premium of staples to the market was possibly the lowest in 2009. And based on that sort of a macro view, and plus we had done a fiscal stimulus at that time, our view was a lot of that will play out in consumption. So that was a time when, really went overboard on consumer staples. And that was like the perfect trade. You don't get such trades because some of the stocks, I'm sure my previous firm is still holding, and they're like 20, 30 baggers from there because not only did they get earnings growth, they also got multiple re-rating. It's very difficult to argue for a multiple re-rating from here. So you're really talking of, earnings growth, and that also is looking difficult, at least to get a strong double-digit growth, it looks difficult. So I think the risk-reward is not there. When I'm getting so many other companies which are domestic-oriented at points of sales in market cap, I don't need to pay multiple of sales to buy staples. So okay, that's my broad view. I could be wrong.
Oh, that's an interesting thought. Okay, because you look at the globe so much, and I just want to end this with a couple of global questions, but before that, a global sector. And I don't talk about IT, fairly predictable, etc., unless you think otherwise, but metals. A cycle which has really turned bad. Everybody says until the trade war is over, don't even touch them. But we did a small study wherein, as per the valuations right now, they're comparable to, at least on the EV EBITDA or price to book, to maybe 2016 or 2009 as well in select cases, at least in the ferrous space.
So price to book is a really safe multiple to play as far as metals is concerned. And typically between 0.5 and 0.7, metal stocks tend to bottom out. But keep in mind that 0.7 to 0.5 itself is a fairly significant fall for the stocks. So people who have the ability to, take losses in this, because it's not like these things turn overnight, but when they turn, they give you multi-bagger returns. So these are very interesting times for metals in general.
And you can, of course, read and watch this entire conversation on our website, bloombergquint.com. Okay, let's, we've euroed quite a bit today, so it's a good time to get in our technical experts to try and tell us what to do ahead of what is a long weekend. Brijesh Singh of StockAxis to kickstart the proceedings at the final 1 hour. Brijesh, good having you. Thanks for joining in. We are in the green right now, or in the red some time back, which also we slipped from the day's highs. What does one do now? At 10,990, what's the trade on the Nifty?
Good afternoon, Neeraj. It's like a zigzag way of a trading right now. The morning you see the green, and then till the afternoon it become a red, and again it becoming a green. So right now the volatility, or I should use the word consolidation. So Nifty has been consolidating in the range of say 10,800 on a downside, or say 10,820 on a downside, followed by 11,150 on the higher sides. So it's like when I talk about consolidation phase and the range, it means like buying near the support and sell near the resistance zone. So right now, I'm not looking any trade, but if anyhow, if Nifty trades, I'm taking a Nifty spot value. If it trades below 10,950, then we can assume your risk reward ratio would be in your favor. And with keeping a stop loss of 10,890, look for the target of 11,050 or say 11,100. But right now, I would be avoiding, but it looked to me that it's a consolidation phase, and the blue chip stocks, a little bit buying has been seeing Reliance, ITC and SDFC, so they are supporting the market right now.
Okay, Brijesh, what about you're staying away from the index, but any strategies with regard to individual stocks today?
Good afternoon, let's say I have a 2 buy call. Now the first buy call is my REC Limited. Now the REC Limited on the hourly chart has been trading with higher lows formations and it's eager to break a trend line and move ahead. So present rate or any dip below 141, one can look out to buy with the recent swing low as a stop loss of 134 and play for the target of 155. Time frame to hold the counter would be at least for a 4 days to a 6 days time frame. And another buy call is Bata on your channel and different business channel. Also, I've been recommending from Bata from a level of 700. Now, and it's making a new 50-week highs on a weekly charts. It's been trading with higher tops and higher bottom formation and making a new 50-week high. So present rate somewhere around 1535, the stock has been quoting, or say 1533. Any dip somewhere around 1525 with trades, then one can look out to go long in it with a strict stop loss of 1480 and play for the target of 1610. Time frame to hold the counter again would be a week time frame.
Okay, so those are some individual stock ideas coming from Brijesh. Let's also bring in our fundamental expert Anand Tandon joins us now on the show. Hi Anand, good afternoon and thanks a lot for joining us. Let's start off with the space which is making news today. We're expecting government to make some mega announcement of merger of these PSU banks, and this is not the first time. This will be happening under the Modi government. We've seen this year with the Bank of Baroda being merged with Vijaya as well as Dena Bank, and in 2017 also I think the 5 associate banks were merged with SBI. But do you think these bigger banks will bring in more economies of scale, and is this the way to go forward?
Well, there are two things here. One is that does the government have a choice? I think largely not. What do you do with a whole bunch of incompetent bankers other than to put them all in the same basket? Now, having put lots of incompetent bankers in the same basket, do you expect that they will suddenly become competent? Or they will fight further among themselves because they will now be 2 account managers for the same account, and you cannot fire either of them. So I will leave you to understand what I'm trying to say in terms of what I expect out of it. Near term, of course, they will all get capital, so they can go out and make merry. You would expect to see some improvement in the financials as they go out and lend to companies which will then turn out to be NPAs a little further down the road. Frankly, public sector banking has to be, in my view, viewed only as a means of reaching out to society among those where the government needs to transfer funds. So there should be perhaps one banker which is actually a DBT bank, which takes some deposit and then gives out money from the government onto outsiders and stops the process of lending. For everybody else, there is now no need for any special bank, except if you are lending out money which you don't want to receive. So there could be a social purpose that you're trying to serve. Beyond that, having public sector banking per se trying to compete with in normal commercial banking with private sector, I think it's an idea which is past its expiry date.
All right. Just quickly looking at how these stocks are faring now, if you take a look at the Nifty PSU Banking Index and each of these components and how they've been doing, while the index itself is not holding up, you've still got a few of these names which are spiking up in trade. So an Oriental Bank of Commerce, Jammu Kashmir Bank, Syndicate Bank, Central Bank of India, Allahabad Bank, some of these names are doing okay for themselves, while the rest of the pack, the undertone seems to be slightly more negative. The big one there, State Bank of India, which is down about 1.5%. Anand, in terms of, while we've spoken about these PSU banks, financials at large, and if you take a look at what's been happening to the private banking space as well, barring the larger names, all of them post their Q1 numbers, or the kind of commentary that the managements have put out. I'm talking about a DCB, a Federal, you know, an RBL bank now. They're all facing a lot of selling pressure. Would you feel that it's better to just stay out from some of these names?
Well, it depends on the time frame you're looking at. Near term, as the market falls, obviously it is the largest sector in the market, and therefore the market can only fall if the financials were to become weak. Don't forget that they had reached almost 40% as a weight in the index, and the index therefore can't largely fall unless the financials fall. So it's almost mandatory that for the index to fall, financials have to fall. And if your market view therefore is negative, you have to assume that the financials can weaken further. Should you therefore be rushing out to buy? I would argue not. I think the market is in no position to be running away on the upside from here, barring some short, sharp rallies. Otherwise, the tendency is down both on domestic markets as well as international markets. So not particularly very compelling reasons to be buying. Also, at a fundamental level, I don't think that we are seeing enough in terms of resolutions of NCLT and so on, which gives you the impetus that was expected in terms of the profit growth from the PSU banks. The consumer-oriented banks also are going to have to slow down a little bit. So I think largely it's a space where the valuations have to correct somewhat to at least take care of the slower growth anticipated.
Okay, well, so that's the verdict on banks and what they have done. Anand, the other, frankly, the other conversation has to be around autos, and August, remember, is expected to be no different from automakers. From all the players are set to report lower sales numbers for the month, and on a high base is only going to make it worse for the larger players like Maruti as well as Tata Motors. Now, before we go to Anand Tandon, let's get in Yatin Mota, who will take us through what the Bloomberg Quint brokerage poll has thrown up. Now, and that's the larger question, really. Will some of these auto companies be able to do well, or will they succumb to the base effect as well as the fact that the demand is not really picked up? Anand, wondering what your thought out here is.
Well, I think eventually they will turn around, but there is one thing that you have to note, that the auto market has been bad not only in India but in many other regional markets as well. So there does seem to be a structural kind of shift in that sector. Now, that said, obviously Indian market is very large, and therefore you could argue that it is still reasonably underpenetrated and therefore should continue to grow. Well, we have our own local problems that we have created, some of which have got mitigated after the recent announcements of the government, but some of which still continue. So I think this year is pretty much a washout in terms of auto sector. The best you can hope is that sectors like tractors, for example, may recover in the third or fourth quarter, largely because the rainfall has been fairly good and reasonably well spread, and therefore that may induce some amount of purchases again going forward. Also, there is no great disruption in terms of technology. But for the rest of the sector, I think either because of technology disruption, prices of diesel, petrol, as well as the fact that it's a hugely competitive market, I think this year is pretty much going to be a washout. You have to really look at what happens in the next year. These numbers are reasonably quickly reported, so you will get a chance to correct. I wouldn't be in a hurry to be buying, except, like I said, perhaps the tractor segment.
Okay. And Yatin, of course, spoke to us, we were talking about this in the morning as well. There are some factors that you've got to keep in mind, specifically with regards to maybe companies like Eicher Motors. But Yatin, the overall snapshot, what is it that the numbers are likely to show?
Neeraj, let's talk first about the passenger vehicle segment. Like Maruti, most of the other peers are also expected to see a sharp double-digit decline. In fact, if you look at Maruti only, we're expecting a 32% kind of a decline on a year-on-year basis. This is largely to do with the fact that the company is now consistently looking at reducing dealer inventory, number one. And number two is that there is no real demand in the marketplace. Because of these two factors, the wholesale numbers for Maruti would be much weaker this time for the month of August. Also for Mahindra & Mahindra tractors and automotive segment, the sales growth will be slightly weak. Tata Motors also, we are expecting a sharp 43% decline, largely to do with the fact that the commercial vehicle sales have been muted along with the passenger vehicle segment. Tractors, as I was mentioning earlier, Mahindra & Mahindra and Escorts both are expected to see a flattish kind of a growth trend. Remember, last year's base is also low. The festive season this time has started 10 days earlier. Probably that inconsistency is there as far as the tractor segment is concerned. And finally, talking about the two-wheeler segment, across the board, we could see some big negative surprises here. In fact, if you look at Eicher Motors, Royal Enfield business, a 16% decline is expected there. As far as Hero MotoCorp is concerned, a sharp 24% decline is seen there. Remember when we spoke to FADA and a lot of these auto dealers, everybody has been talking about the kind of higher dealer inventories which are sitting out in the two-wheeler segment, and probably that will impact the dispatches in the month of August for all of these companies. And also Bajaj Auto is something we'll be watching out for. Unlike the other peers which are witnessing double-digit volume decline, Bajaj Auto is expected to do slightly better in terms of the comparative data. Only a 9% decline is seen there for Bajaj Auto, which clearly means it's not only gaining market share but outperforming in such a difficult market as far as the domestic motorcycle market is concerned.
All right, Yatin, thanks very much for that. So that is a quick take and what brokerages have been saying. But the other stock I want to talk about is Z. I should pull that stock up on your screens. They've managed to sell some solar power assets of theirs. Total enterprise value of about 1,300 odd crores. Remember, they raised about 4,200 odd crores just at the start of the month of August when they had Invesco fund buying in. Total debt that they said that they would try to pay back by the end of September, 30th of September, is somewhere closer to 7,500 odd crores. So they still have some more money to raise in order to make sure that they meet that deadline. But Anand, would you look at this in a positive light? Would you be a buyer in Z?
Well, on a longer term basis, I think yes. I have a bit of a difference of opinion between what the street analysts are expecting and what I think is good for the company. I think necessarily, having only strategic investors is not only the only way. So long as the business itself doesn't suffer too badly because of the economy or things that the management has done, I think the valuations are reasonably cheap and at some stage will come through. So, I'm reasonably positive on the company.
Pritesh Mehta, head of Yes Securities, is joining us right now on this show. Pritesh, very good afternoon to you. A quick comment on your stock ideas first before we go on to your index call.
Sorry, I'm not able to get you there.
Could you run us through your stock ideas since we were discussing stocks? Might as well get your stock ideas out of the way first.
Sure. Now see, one thing which we are able to understand from this volatile movement in the market is that, private banks are showing some respite. If you look at the overall sector, holistic approach of all these sectors, the autos are not showing any life of recovery. There's either PSU Bank, I can term it as a pop-up trade right now taking place in PSU banks. But, apart from that, I'm not getting anything else apart from the strength which you are getting at lower levels in private bank space. If you look at the Nifty private index, then there is a strong support around 15,100. Now private bank index, the same also coincides the 3-digit GAN number of 15100. So I think in today's trade also the recovery that we have seen in second half of session, it has been led by private banks, ICICI and SDFC Bank. And I think that as a trader, you should be focusing on outperformers and leaders. You have to buy into strength, and these two spaces are showing strength. ICICI Bank in particular, if I look at the ratio chart of ICICI Bank against Bank Nifty, it has given me a breakout out of 5 years of consolidation. It tells me if there is sustained rally coming in the private bank, ICICI Bank is going to lead from front. And also we have seen in last few months, the peak of the month of Jan, that is 381, has been holding strong. In fact, several times the stock came down and thereafter it has bounced back. So I feel there is more in terms of structure, this one stands out, and there could be a rally towards 430 in the counter. And SDFC Bank definitely, I think this is one of the another case of safe stocks from the private banking space. And HDFC Bank being a market leader, being a market heavyweight, these stocks tend to do well, and whenever there's a recovery in the market, and I'm expecting the support of 10,900, 850 to hold on, and the next round of buying could be led by this particular counter. So I'm expecting another round of at least a 4 to 5% move coming in HDFC Bank as well.
Okay, so betting on two private banks, that's the call coming in from Pritesh. I just want to mark few stocks. Pull up Page Industries, that's sitting at day's high. The stock's gained about nearly 4% in trade right now. You've also got HDFC AMC and HDFC Life. Now, these two stocks every second day seem to be registering great moves. Both of them have been trading at their lifetime highs. Bosch, I think, was a technical call on countdown yesterday. It's gone up once again by almost 3% in trade, so good going for this one as well. And besides that, SL Proprac, that's locked in upper circuit with gains of about 10%. From the broader markets, you've also got something like Metropolis, that's seen gains of about 9%. And of course, we've been talking about how the PSU banking space will be buzzing ahead of that news. So out of that, Oriental Bank is up about 7.5%. Remember, the stocks which will see some bit of positive moves will be the banks which will get subsumed into the bigger banks, benefiting from that merger. And probably let's see how the bigger banks react. As of now, we've seen negative reaction for Punjab National Bank as well as State Bank of India. But one space which has been doing well, and that's the pharma space. Nifty Pharma Index yesterday also went up in trade, and today I think that's the top sectoral gainer once again. Sun Pharma is up and about. You've got Biocon and Cadila, which are seeing strong gains. Brijesh, just a technical check on Sun Pharma today. If I'm not wrong, it's also crossed its 100-day moving average. How is it looking on the charts? Would you recommend taking any sort of position here?
Just few minutes back, I'm not expecting pharma to provide a turnaround. Yes, there could be a possible dead cat bounce coming in some of the pharma names, but as a sector, I think it's completely avoid. If you look at the ratio chart of the Nifty Pharma Index against the Nifty Index, it is trading around 7 to 8 years lows, and I'm not getting any kind of reversal on a long-term basis. So yes, I think we could see some recovery coming in, but I think as a sector, I think it's still not out of the woods. If we go into stock specific case, Aurobindo Pharma, I think if there is a pullback coming in the pharma space, I would try and to play a trading move in Aurobindo Pharma. The stock is holding on to the support of 540, 530 for a long period of time, and thereafter what we have seen is a classic case of base building. And right now it's trying to conquer the levels of 600. If it's able to do so, then we can see sustained round of buying coming in, which can take the stock to 630, 635. But I think that's the trading view which we can get from Aurobindo Pharma, nothing more than that.
Okay, and talking about Sun Pharma, it's already crossed its 200-day moving average in trade. Anand, come in here in the pharma space, which has not done too well in the last 3 to 4 years. But in these times of uncertainty, do you see money moving to pharma?
I think there is opportunity in pharma very clearly in some of the companies, because the reason why the last few years have been bad, it's been largely a compression in the market in the US, both from the point of view of margins that are made because of generics being awarded approvals very quickly, as well as the fact that there has been a consolidation in the buying space. Both of these are now played out to a large extent, and I think going forward, the likelihood of compression in margins is now fairly low, because the portfolio of many of the companies have also changed such that the low-end ones are moving out and people are looking at more complex generics. Also, the Indian market is doing much better now. Valuations also have corrected. So in the entire space, if you look at in the market, many of these companies are export-oriented companies, which I think will benefit in the general outlook. Their markets have kind of stabilized, and if from here on can perhaps do better. And the valuations are far lower than many of the other pricey sectors in the market. So in my view, it's a good time to be buying pharma, especially the leaders. The smaller companies also have shown quite good results. I mean, companies like Ipca, for example, did very well. Even companies like Granules, which are only now making a entry into the US market, have reported fairly decent numbers. So I think there are pockets of strength, and one should be using this weakness or a long-term weakness that we have seen in pharma to be building up a portfolio quietly.
In fact, extending from that, I want to also look at the diagnostic space. And Navneet took a check on Metropolis. It is a recent listing. The stock's trading at about 1165. The issue price was somewhere closer to 880. The day of the listing, it listed somewhere closer to 970. And there's no turning back, post that. And the stock's at 1166. So it has actually had a pretty neat ride since the time it is listed. 7 days, stocks up about 17%. And the other one is a Dr. Lal Path Labs. That too, has had its own fair share of decent gains in the last 6 months, in the last 1 year. In today's session, also the stocks up about 3.5%. Slightly, less in terms of the overall traded volume, but nonetheless, for this year itself, the stock's been up about 35%. So in a market where the indices are not doing a whole lot much, other mid-cap stocks have given way, these pockets are doing fairly well for themselves. Anand, you want to come in the diagnostic space?
So as you said, this is an area which has done well. Two primary reasons. One is that you are looking at companies getting consolidated out, for a variety of reasons. A major one being that the standards that are required from labs is going to go up. The other thing is that, some of these companies have actually put the expansions in line and therefore now are actually benefiting from the fact that the new capacity comes on stream. The challenge I have is the valuation. Many of them are already reflecting the kind of growth that one is looking at. So in the healthcare space, I personally prefer hospitals if you are going beyond pharma, largely because of the fact that, the valuations are far cheaper, especially the ones that have been listed in the last 18 to 24 months. And the capacity there also has come on, not yet been fully utilized. And as the utilization goes up, one expects to see significant earnings growth coming in.
Interestingly, in one of my conversations with Amira Shah from Metropolis, she also spoke about the fact how in India currently, they're hoping them to follow the route of some of the other developed countries where hospitals should not be allowed to do in-house diagnostics and in-house testing. It should be allocated to the external parties and external pathology labs. And if that probably is something that they're expecting to happen in India, then this is going to be a big kicker for the entire space. But whether or not that happens is another question. Moving on, regulators at the European Union is set to have given the green signal to the Novelis Aleris deal, according to Reuters. Remember, Hindalco's American subsidiary is awaiting approval from regulators from different continents for this acquisition. Nikki Mirchandani, she's joining us with more details. Nikki.
Thanks, Davina. Hindalco is finally, heaving a sigh of relief. It's up and about with gains of around 2% with the development which suggests that the US subsidiary is all set. It's not got until now, but it's all set to secure EU antitrust approval for $2.6 billion bid for Aleris. Now, this to an extent eases off European Commission concern. The company may, however, have to sell off Aleris Belgian plant. Now, this has a far-reaching impact in terms of the kind of concession that the European authority has demanded from Novelis. Earlier part of the deal, they're trying to just push the deal across by suggesting some amount of higher capacity and also by adding jobs, but then that's clearly not gone through, and the European authority has had an upper hand. Looks like the deal is going to go through, but then however subject to the approval from US and Chinese authorities until now. The Commission is going to be taking a final call on this decision by October 7, 2019. Hindalco in an earlier part after the earning reaction told us that's going to be deferring out. It expects the deal rather to be completed by Q4 calendar year 2019 as compared to Q3 on account of the kind of regulatory challenges that it was witnessing. But if you look at what kind of synergies that the deal will bring in, and when it was only signed back in July 2018. The deadline to that extent was 15 months. It's going to be a mix of equity as well as debt deal, which is going to be funded by a mix of equity and debt. And the synergy is to the extent of $150 million, and which is going to be applicable from third year of the integration from the two companies. Now, also do bear in mind the fact that Aleris has done exceptionally well in Q2, and the EBITDA performance has been is expected to surpass the target that the company has set for itself. If that comes true, Hindalco is clearly having an upper hand here because of the kind of valuation that the company would have at the time of acquisition or the integration of the deal, rather.
Thanks for that, Nikki. And of course, if this goes through, their EBITDA from the non-LME linked prices, that pie will also go up, which will be a positive sign. Remember, as of now, the domestic operations are linked to LME prices, and how we've been talking, metal prices are correcting due to the crash that we've been witnessing there. But of course, it also brings about additional debt on the books to the tune of about $2.6 billion. Hindalco is sitting with gains of 2%. However, it's come off the day's high currently at 183.3. Let's quickly move on on to the chart of the day. Indian markets are the worst performing indices in Asia this month, and that makes it 3 months in a row. Yash Upadhyay is here to tell us just how bad it's looking. Yash, over to you.
Oh, that's right, Navneet. So the Nifty is on track to post its worst losing streak in at least 6 years. So for the month of August, it is almost down close to 1.3%, making it the only time since August of 2013 when it had closed for a third consecutive month of losses. Now, this is on account of sharp fall that we've seen in some of the index heavyweights, most predominantly from the financial space like SBI, ITC, ICICI Bank, Kotak Mahindra Bank, and L&T, all of whom have contributed to this big fall that we've seen in the markets, as concerns with respect to weak corporate growth, slowing economy, as well as tensions on the global front kept the markets under pressure. And this was despite of the fact that the finance minister exactly a week back had come out with measures in order to boost the economy. We saw a mild bounce earlier this week, but then again the buying was completely sold into, and we are trading in the red on the week as well, or slightly on a flat basis. In terms of individual sectors, all but only 3 sectors have managed to end in the green or are on track to end in the green, and we'll discuss only one of them, which is the Nifty Auto Index, and that one has managed to buck the trend. So after 3 consecutive months of losses, the Nifty Auto Index is up about 1.45%, again snapping its longest ever losing streak since 2015. Now, one of the major reasons for this was that most of the auto companies, they had run up ahead of the announcement that came out last week when the finance minister came out with several measures in order to boost the demand for the stretched sector. And this was aided by sharp gains seen in some of the index heavyweights like Maruti Suzuki, which is up close to 11.5% on a month-to-date basis, along with a high single-digit return managed by Bajaj Auto as well as Hero MotoCorp. The other 2 indices is primarily the Nifty IT Index, which is up on account of the weakness that we've seen in the Indian rupee. The rupee is the worst performing Asian currency, down almost 4% this month, and tracking the weakness, the IT Index is the other big name to watch out for.
Okay, we'll watch out for all of these. Thanks a lot for that, Yash. So those are some pockets and the performances that we've seen thus far and what you should watch out for. Now, before we take a final set of questions, maybe from Anand, one stock that stands out is Delta Corp, and the movement that we've seen in the stock in the last few days. I think the 7-day performance is pretty strong, about 80% higher. It's gained very well in the last 2 or 3 odd sessions. The question is, can it continue, because it was bogged down by a number of reasons which were rumors more than actual reasons. Now, Anand, maybe not Delta specifically, you may not really have a view on that, but all of these niche companies which were the flavor in the better part of 2017 and then have just completely gone off because the earnings are unpredictable, even though the businesses may be niched and fancied. Any thoughts here? Sin companies like Delta Corp?
So I think there are 2 overhanging factors in this. One is the fact that the government per se doesn't like a certain segment of the economic society. A certain economic segment of the society, and therefore it is quite possible that they may come up with rules and laws which are inimical to them, and unfortunately Delta caters to one of those. The other, of course, is that Delta actually has a lot of things going for it, that they have new capacity set up where they are waiting for licenses. They are best positioned to actually transition from river-based casinos to land-based casinos and so on. So that they actually have a lot of capacity which can go on stream and can actually increase their earnings profile very well. The question really is balancing between the 2, and therefore, depending on which side scares you more or excites you more, you can take a call on Delta. There are, in my view, right now a good time to be buying small cap companies, and perhaps the smaller mid cap companies. I think the frontline stocks continue to remain expensive. However, the mid cap and small cap, especially the smaller mid caps, have completely collapsed, and many of them are now offering value which are standalone quite attractive. You do run the risk that if there is a further fall in the frontline companies, then many of this will also give you a sharp spike downwards, because they are largely illiquid, and therefore any amount of selling, or even a small amount of selling, will bring the prices down. But I think you've reached a valuation where you should be able to easily ride it out, and in fact it's not likely to come down on large volumes. So if at all there is someone looking to invest, I would argue that despite the fact that you may not make immediate term money, the margin of safety is significantly higher in mid and small cap, especially the smaller mid cap. And that's also a segment which the mutual funds are pretty much kind of ignoring for the near term. So therefore the valuations are further depressed. Both of this I think gives you an arbitrage opportunity of being able to generate better returns with lower risks in that segment.
Okay. Anand, and then we'll leave it at that. Thanks much for taking the time out, and let's all of us cross fingers for a better festive season. Let's see if that comes about. That's Anand Tandon with his views on the markets and maybe specific businesses. Speaking of specific businesses, before we get back to our technical experts, let's find out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day. Johnson right now with that. Sharad, should not have been too difficult a task, but what stood out?
Yes, Neeraj, it wasn't. The first stock is Oriental Bank of Commerce. The stock went up almost 7% today. This is based on the news that there's going to be PSU Bank's merger announcement by the FM at around 4 today. Up next, we are having Adani Green Energy, which is up almost 6.6% after the company has signed an agreement to acquire 10 solar projects from the SL Group. The enterprise value for this transaction is roughly around 1,300 odd crore rupees. Apart from this, we have Group Finance, which is up almost 3.3% after HDFC has sold almost 9.2% stake via a block deals. We don't know who's the buyer for it, but we'll get you the details in the post-market hours data. Up next, we are having Bombay Dyeing, which is up almost 6% with the high volumes and trading almost 3 times its 20-day average. So these 4 stocks are buzzing in the space today, Aga.
All right, Sharad, thanks very much for that. Sharad Dubey there with the list of Fab 4 stocks. Coming back down to a few stocks and some technical calls on them before we move on and get in Deepak Shenoy as well. Edelweiss continues to reel under pressure. Now again, today's session has seen a 5% cut on Edelweiss. It's at 110. I really want to see what Sterlite Tech is doing after the kind of whipsaws that the stock has seen in the last 5 trading sessions. So Sterlite Tech in today's trade is absolutely flat, about 114 on that one. Zealand, that's down about 3% and Muthoot and Manappuram both seem to be under some amount of pressure despite what gold has been doing. Brijesh, quickly, Edelweiss at 110 and also if you track Sterlite Tech at 114.
See, Edelweiss, it got corrected from a level of 178 and the previous swing low of 137. So I'm not looking stock crossing 137 or even 128 very easily. There would be a more selling pressure and that is to consolidate in a range of 95 to 110 or 115 zone. Then only we can see an upside. So 128 would be acting as a tough resistance. So better to be away right now because the risk reward ratio is not in their favor. Sterlite I don't touch, so I would not be able to comment on it.
Okay, that's the technical check on Edelweiss. Pull up Tata Motors. I think the stock is in green right now. It's up 2% off the day's low. Yep, it just moved higher in the last 10 to 15 minutes of trade. And not only that, by the way, Nifty is back around the mark of 11,000. Day's high was somewhere about 11,020, 25. Let's see if we can close above that mark. It will be definitely a positive sign, at least for the bulls. And Bank Nifty is up about 82 points. We were mentioning about the PSU banks, and I just want to highlight J&K Bank is up 15%, Corporation Bank is up 9%, Oriental Bank of Commerce 8.5%, Andhra Bank is also gone up, UCO Bank of Maharashtra. So all these candidates which can get subsumed into a bigger bank are moving up in trade. And of course, on the other side, you've got SBI, PNB, and a couple of other banks which are right now trading with some bit of cuts. But one stock which has been really strong, at least for the week, that's MCX. It's trading at 52-week high. The stock's also seen some bit of long positions. In fact, Brijesh, I'm going to come back to you. Up 14 or 15% for the week, MCX at current levels. If somebody is still holding on to the long positions here, what should be the target on the upside?
See, MCX, no doubt the stocks after breaking its previous swing high of 895, it has moved up significantly. And that too with increase in volume. Now, suppose someone has been holding, I would be only saying that hold on with a trailing stop loss of 916. Till it doesn't break, nothing to be worried about. And the daily charts and as well as the weekly charts are suggesting more upside. So now on the higher side, the stock would be having a resistance at 1120 to 1140 zone. So that is the ideal resistance where if someone has bought it at the below 900 or something like that. The ideal level target which I would be looking would be somewhere around 1120 to 1140 zone. So chances are that in the next week we might see stock trading near that level.
Let's see if it becomes a 4-digit stock, which it was at one point of time. HUL is the other one, which is almost at day's high, and it's once again inching closer to the all-time high levels of 1889, by the way, which was just hit this week itself. Pritesh, HUL at current levels, what would you advise to do? Pritesh, that's for you.
The way the market, yes, the way the market is shaping up, again, it is turning into a bipolar market. Select stocks are working well and taking the markets higher, and HUL definitely is one of the stocks which is contributing. It is on the verge of breaking out about the levels of 1900. I think this stock could go, still has some juice left. It has seen rally from 750 odd levels, and I think that this up move is going to have more legs on the upside. We can see the levels of 1940, 1950 at least, and I think the way the consumption stocks have made a comeback. If you look at the likes of Nestle, the Britannia bounced back from the lows. I think that could be more room on the upside for this counters as well.
Just want to look at a few stocks that have had a decent, in fact, a very good a week or so gone by. One stock amongst that is a Navkar Corp. Obviously, the volumes are not, as high as some of the other more liquid names, but over the last 1 week, it's actually not all that bad. You still have closer to about 1 lakh shares being traded on the counter. But in the last 1 week, the stock's been up about 41%. Almost on a daily basis, you've seen the stock spiking. The other stock that we're going to be watching out for, amongst the gainers in the last a few days, that we've seen has been Vodafone Idea, which is today's session also up about another 10.5%. Though, this stock obviously now becoming a penny stock, don't really know if you can trade much on it. But a Navkar Corp, any of you, Brijesh, let me ask you first. Do you track this one?
If I talk about Navkar Corporation, these right now on a daily chart is in the process of making a doji, and that indicates the sign of a reversal. Now at this rate, I would not be going long because the risk reward ratio is not in the favor. But anyway, if it trades below 30, then one can look out to buy with a strict stop loss of 37 and play for the target of 36.5 to 38.
Got that. Only if it comes on like closer to 30 odd. Minda Corp, SL Propack, Bombay dying above 20% in 1 week for all of these names. Deepak Shenoy of Capitalmind, he's joining us right now on the show. Deepak, any interesting insights that you can share with us with regards to, what's the strategy and the approach to the markets now?
Hi, good afternoon. It's been a very interesting set of moves in the market in the last few days, both in the bond markets where we've seen like correction in the 10-year bond even after the big cut by the RBI earlier this month, and in stock markets where we've seen, I think, a little bit of ups and downs. We've seen FIs continuing to sell even after those clarifications came from the finance ministry, and the rupee kind of sliding a little bit. So I feel, right now we are in a bit of a flux. I think the rest of the year is going to be very volatile, more to the downside. There is going to be some policy announcements that will probably drive some action in the near future, but there are still a lot of worries in the market regarding, a lot of players that are on the borderline of in terms of debt or in terms of bankruptcy and all that stuff. So I think announcements later in this year are going to make some of the banking system feel a little more miserable. So I don't necessarily call this a bottom, but I definitely feel, that a lot of stocks have now come to a point where, you should start looking to buy them very slowly over the next few months.
All right. That's for the banking space. But what about, the autos? We've got, initial comments with regards to the slowdown manifesting even in the month of August. Nothing materially changes on ground for four-wheelers or two-wheelers. Would you stay away from autos still, or it's time to probably be a little more picky, start looking at the ones that you feel can have a faster turnaround?
Well, to be honest, I've not stayed away from autos at all. I've been buying them through the cycle. both up and down. I continue to believe that autos are a significant growth factor in India. We're going to have cycles like this. I think of it as a 10-year view. In 10 years, I don't think the auto industry is going to be the size of what it is today. It's going to be significantly bigger. There'll be winners and there'll be losers. We have to make our bets, but I don't think the sector itself is going to be a laggard. It's going to be a tremendous leader going forward. Think of the fact that India doesn't have really public transport to speak of in most places. Even where there is public transport, it's extremely overcrowded. So I don't think people will be able to live without cell-phone cars. Sometimes in some urban areas, maybe an Uber or a Ola can change things, but in the long term, in multiple cities, you're going to have car ownership only increase as people get slowly over time lifted out of poverty. And whether being inclement and all that, I don't think we are going to see people walking to their destinations in the near future. So take a 10-year view. This is just a small blip in that time frame.
You're buying a company for 10 years, Deepak, right now?
Well, to be fair, my family has owned Hero Motocorp since 1985 when the IPO was. So I think 10 years is probably short term in that context. But yeah, I mean,
I agree.
You want to buy companies for 10 years.
No, I agree. That way, I just thought that nowadays, based on our conversation in the Bangalore BQH event as well, that cycles are becoming shorter, and hence that question. Just one quick follow-up, Deepak, Shenoy, and that's on a stock that's doing well today, Page Industries. There is some traction there. Now, is this expectation of the worst being priced in, or a flash in a pan move which will get corrected soon?
Well, the market being as it is, maybe the humorous way to approach is people have lost it and they've got to buy it back. So, that's the problem really is in a company like Page, you can't take a one-day move and say things have changed. I think numbers have to change. They are facing some headwinds. There is a lot of room for them to grow. This is not a market which is fully saturated in terms of whether it is premium garments in their area, whether it is the men's or the new areas which they're venturing into, which is the children and women's wear as well. So I think it's a little early to call it a complete turnaround. I hope the stock starts to move, but the stock's always moved in bits and pieces, and if you're taking a long-term view on this stock, I think the idea would still be to wait for another quarter for results to emerge and then take a call. Noting that, of course, the markets that they've been in recently has seen a lot of competition, and the numbers weren't quite as attractive in the June quarter. So I'd still wait a quarter or so to take a fundamental call on it. Maybe there's more in the trading area. I'm not sure about that.
Okay, that's Page Industries for you, which is sitting at almost a day's high with gains of 4 to 4.5%. And the markets are also, by the way, around the day's high mark. So it looks like we're going to have at least a positive closing to this week. Most of your sectoral indices, most of them are trading with good amount of gains. So good time to get the dealing room check and go across to our colleagues, Darshan Mehta and Yatin Moda, to check what their channel checks have been indicating. Good afternoon to both of you. Darshan, you go first.
Yeah, so good afternoon, Navneet. The HDFC twins are finding favor in trade today. HDFC is up 1.6%. HDFC Bank is flat in trade, it's come off the day's high. But nevertheless, what I've been told is some of the domestic funds are actively accumulating both the stocks, so that is something that we'll watch out for. The diagnostic space has done extremely well. You can see Dr. Lal Pathlab is up almost 4%. Metropolis is up another 5-6%. So some of the HNIs have shifted focus to buying some of these stocks in this space. So that is something that's been spoken about. And Polycab continues its good run, up another 3%, another brokerage initiated. So some of the larger brokerages have started interacting with the management, and they have started pushing this stock to their clients, up another 4%. So Polycab is something that is being spoken about. But Yatin, what are you hearing?
Darshan, Tata Chemical, that is one stock which is in focus. Stock is pretty strong in these weak markets, 2.5% up for that one. Dealers do indicate that a lot of these domestic funds are aggressive buyers as far as Tata Chemical is concerned. Yes Bank, now if you look at the intraday chart, very interesting. Stock is at the day's high. Remember, they also have a board meeting slated. very, very soon regarding a fundraising plan. Probably a lot of short covering ahead of that, 5% up for that one. And as you can see on your screens, days high and good strong volumes, almost 20 crore shares traded for Yes Bank. So good volumes for that stock. And Glenmark is one stock which has seen a sudden cut in trade right now in the last 15 minutes. A couple of rupees gas down. Dealers do indicate a sell today, buy tomorrow kind of a strategy based on the technical trends.
Okay, Darshan as well as Yatin, thanks a lot for joining us and taking us through your dealing room check. But still, there are a lot of pockets which are not doing well, and how the gold financing companies have been seeing some losses. Manappuram is, by the way, now down 3%, and it has been witnessing a lot of short positions here. And you've also got on the gaining side, I think NMDC is sitting at days high. IndusInd Bank has risen. That's also one of the top gainers in Nifty now. IndusInd Bank is at 3 to 3.5%, and your metal stocks are rebounding in trade. Tata Steel, JSW Steel, both of them are sitting at days high. Deepak, we've been asking everyone about the metal space, and there's been a carnage. Literally, the Nifty Metals Index is down nearly 15 to 16% so far in this month, and the reasons are global majorly. Of course, demand offtake may not be there in India, but global reasons are also impacting the companies back home. What do you do with this one? Do you see the cycle turning anytime soon, or it's best to just stay away and wait for the LME prices also to rebound?
To be fair, I think metals have seen their upside a couple of years back or a year or so back, and they're going through a down cycle now. There's demand compression everywhere, whether it is auto or many of the other sectors as well, where demand has come off substantially. There is also a one-sided bet on Trump and China, which is anytime he tweets something that will destroy world trade, metals will fall. So, given that, I'm not very excited. There's no innovation in this area, right? So it's not like if I really tried hard, I would get better metal. I'm still going to be building the same steel and the same aluminium and all that stuff. So it's really a bet on an industry that says, well, if there's demand, I will sell more. If there's too much supply, then I will lose to my competition. And if Trump tweets something, then my prices go down. So it's not a sector you want to bet on for the long term. Maybe cyclical patterns. This is probably not even the bottom. Probably end of the year is when markets start to turn around for metal on a very short term basis. It's like a 1 year or a 7 or 8 month trade at best. It's like sugar. You trade it because it's a cyclical and you can track the cycle. But otherwise, there's no real long term use in a steel company or a metal company.
All right, I think Britannia is one stock that you should keep an eye out on. Being an index stock, the last week has been really good. It's been up 10% in 1 week. From last Friday, the stock's now at about 2,700. In the last 7 days, it's about 13% higher. And Nestle too, the formal announcement of the entry into the index on the 27th of September. Today's session also, the last few minutes of trade, as you can see, the stock has actually spiked after doing absolutely nothing for a majority of the day. It's, in fact, making its approach towards 12,900. I want to look at how the week has been for Nestle as well. Volumes have picked up a bit, but the last 7 days' performance still not comparable, but about 2.5% higher. Pritesh, do you track Britannia?
Yes, we discussed about it, how the conservative stocks have made a comeback, and Britannia definitely, it has taken support around its 2-year mean average, and from that point onwards, it has given a solid return of 10%, and I feel there could be more on the upside. We can see rally towards 2,800 also in this counter.
Okay. Quick closing strategies, and I think we're about 10 minutes away from market closing, so just let's get that out of the way. Pritesh, keeping it with you, what's going to be your buy today, sell tomorrow, sell today, buy tomorrow idea?
I think a short-term recommendation is a buy one, and that is on Havels. Now this particular counter went through the corrective phase of 24%. We are talking about a decline since the highs of the month of June, and that the stock has created some sort of bottom around its 2-year mean, and it has spent 4 weeks around the same level. The same coincides with the 3-digit GAN number of 625. But there onwards, after that bottom building, we have seen a breakout attempt in today's trade, and I think there could be follow-up buying coming in. So expecting a move on the upside towards 720, 725 in next couple of days.
Brijesh, your closing idea?
I have 3 buy calls in my list. So I'll start with bank. DCB Bank is looking good on the chart. Somewhere around 207 the stock has been quoting. So one can look out to buy with the stop loss of 202, play for the target of 215 to 218. And the buy call is Ujjivan Finance. Today the stock had given a breakout from a trendline pattern, and somewhere around 304.5 the stock has been quoting. So present rate can be used for accumulation purpose with the strict stop loss of 299, play for the target of 315. And another counter for BTST as well as for short term is IGL. Now the IGL for BTST 336 the stock has been quoting, keeping a strict stop loss of 332. Look for the target of 344. If someone has a view for a 1 month time frame, then the stock on a daily chart it has made a W pattern which indicates a bullishness. So for that thing, present rate can be used for accumulation purpose. Here your stop loss would be 315 and play for the target of 370 zone.
Okay. A stock which has done very well is United Spirits. I think up for the 4th or the 5th day in a trot, so 6th day on a trot, as my producer tells me. So good going. Bring up this week's chart or bring up a GIP6, whichever it is. The stock has done really well. 631 and counting this week, about 8.5%. We're speaking about consumption names. This one has done very well too. Deepak, what's happening here? Is this some reiteration of the fact that valuation for these companies had been beaten down, or the general market now looking like making a bit of a bottom and therefore buy companies where the growth story seems a bit more structural?
Which company was this?
United Spirits, Deepak.
United Spirits, yes. I mean, United Spirits is expensive, even if it is looked at at this price. I think United Breweries is better from that perspective, but United Spirits has challenges of multiple orders now. I would have actually expected the previous quarter to have been really good, and it was in comparison because of the elections. But in general, there are some challenges now, I think, because of the changes in the price of some of their input goods, which are mandated because related to the sugar issues that are going on. And also another area of interest is about how some of the resolutions of some of the past issues with USL will come to light. I think in the next 6 or 8 months, we'll see some of that. Over the longer term, this is a good and interesting company with a has been a very lousy return on equity player. Only in the last 3 or 4 quarters, we've seen a slight inching up of the ROE. If this starts to change positively, I think then this can be a great longer term story, but I'm not confident enough to say I want to buy it yet. I like it. I think I like UB more than I like USL. But in general, these are expensive stocks. You have to consider that in this time when there are so many other cheaper stocks as well.
Yeah, I think, there are some flashes on your screen and you should monitor what's been happening in the real estate space. Government officials saying that the government is likely to announce bank consolidation, relief for home buyers and the real estate sector today. Remember, this was something that any which ways the street was anticipating, and the conversations, all around creating of a stress fund that could be set up to help complete unfinished projects. Remember, there is a liquidity crunch as well for the entire space in terms of the number of stalled projects, and probably what would come about in the announcement from the Finance Minister Nirmala Sitharaman that is going to keep everybody on the edge with regards to what to do with the real estate space now, at least in terms of the stocks and the kind of moves we've been seeing of late.
Yeah, and the real estate measures could be interesting because there are two things that can be done out here. One is whether or not the measures are in order to protect the home buyer, or is it in order to ease the liquidity mess that some of these NBFCs as well as the companies find themselves in.
So when we spoke to Ghulam Zia, that's what he said, right? So the announcements so far have been targeted towards the end consumer to make sure that there is a spur of demand that's been created. There's nothing that's done for the developers. So probably that is something that the street is anticipating.
Deepak, what could possibly come out, and if something does come out, is it prudent to bet on this space, which is volatile at best and more often than not, save for selective names, does destroy investor wealth?
This is interesting. I have no idea what they're going to do, Neeraj. I think there is a very strong lobby to say, listen, we need a collective action in some way for projects to be completed and handed over to home buyers who have probably paid a certain portion of their home loans, but haven't got any idea of when their properties are going to be finished. Whether the government does this or creates a consortium that does this or creates a subsidy that allows an entity to be built that will go and finish these projects and perhaps get a tax cut or some kind of remuneration in some way, partially from the home buyers and partially from the government. I don't know what is going to come, but I can reasonably well say that here some of the builders deserve to go bust. They over-leveraged themselves, they did the wrong things, they took money for one project and putting it to the other. We need to punish them, we need to send them out of the system. Being a builder is one of the least barrier to entry professions in India. So I don't think we will suffer if a lot of these builders go bust. The stronger ones are anyhow strong. They have reduced their debt and they are now in a much better balance sheet position. And I believe it will only help if this industry consolidates. The most important thing, cut prices. If you don't cut prices of houses, you will not sell this inventory. I hope the government drives this concept down, and if it involves that some builders go bust because you have to cut prices, then so be it. But cutting prices is a very, very important part of this deal. Let's see if that happens or something results in that direction. But I think why not pipe dreams? We're always going to get some kind of a very standardized bailout kind of package, which I perhaps will not like as much.
Okay, let's see. Deepak, we'll wait and watch. A slew of announcements expected today as well. Fridays have become more active post-market closing as opposed to otherwise. But thanks so much, Deepak, for joining me today and giving us your perspective. Let's start wrapping up the markets. We're doing very well for the Nifty 50. And by the way, it's not the Nifty Bank which is leading the markets. That's about 0.65%. So there's participation, yes. But beyond banks, other factors participating. I think metals and FMCG are putting on their show today. And as a result of which, we're about 93 points higher for the Nifty 50, about 300 points for the Sensex. Well, so out of the 5 days, we've gained for 3 days, lost out on the previous 2, maybe due to expiry. Today, we are doing really well for itself. I think that's what Gautam Shah of JM Financial was indicating today as well. But of course, we'll talk to him next week and try and gather more. Mid-caps and small caps have done better than the large cap peers, and therefore the market breadth should be ending in the positive. Very interested in seeing what the volumes and what the FI participation is like in the session today. Whether there's a sell number yet again, or could there have been some buying. What's doing well? Well, Yes Bank at the top of the pile, but the non-banking names, Sun Pharma, Z, Vedanta, Tata Steel, Hindalco, and while HUL and ITC may not have the largest percentage gains, but because both of them are in the green, they are contributing to the index movement, which is why HUL at 2.5% becomes a very, very important stock to monitor. Save other than banks, maybe HUL and ITC, which would be doing well. What's not doing well? Very little. Not too many heavyweights correcting. Bharti Infra, Coal India, Power Grid, HCL Tech, iShares, they don't really move the needle too much on the contribution side. Kotak might be there, ONGC, Larsen & Toubro. So those are a few names, but largely the stocks which have lost today are lightweight stocks, and which is why the market is closing in almost at the highest point of the day. But the mid caps and small caps have done even better than me.
That's right, Neeraj. All's well. That ends well for the week itself. Also, we're closing at day's high. So let me start off with a couple of gainers. And the moves came in after the news came in that the finance minister will be making some announcement today in the evening. And of course, for that, she had dropped hints even in the previous press conference. So JNK Bank, Andhra Bank and Oriental Bank, all these three banks went up in trade, and the move was quite sharp, and these are the banks which could get subsumed with a bigger bank, and that's the reason why you saw these stocks rallying. You also had PFC and REC, which went up in trade, I guess, in the last half an hour or trade or so. All these stocks are closing at days high, 4.5% gains coming in for PFC. Even REC saw strong gains today. GIC RE now, in the last 15 or 20 minutes of trade, there was some buying interest seen for this stock, and that's closing. Look at that. I think for majority of the session it was flat. The move came in just in the last 15 to 20 minutes of trade. Beaten down counter from the metal space. NMDC went up about 4 to 4.5% today. And not only for NMDC, I guess even the steel makers bounced back. MCX at fresh 52-week high. Long positions continue here. After a long, you had Page Industries also, which rallied in today's session. In fact, that's also closing around the day's high mark. And from the small finance banking space, Equitas and Ujjivan both were up and about. Well, you had a lot of gainers, but the losers are few today. So HPCL is one of them. That stock closing off the day's low though, but still down about 2.5%. Ashok Leyland didn't have a great session today, and that stock's also closing with some bit of cuts, down almost 2% in trade. Gold financing company, Manappuram Finance, was down. Some shorting seen in this counter as well, and something like NBCC, that despite of markets moving higher, we did not see any sort of renewed buying interest, so this stock was down almost 4% in trade.
All right, we've closed the day, we've closed the week, and it is a positive week on the index. So about 0.6% higher on the Nifty Bank, the Nifty 50 at around 11,000. That's not a bad marker to go by. And to end the week, considering that the series was not all that great, but the week has been fairly okay. I think almost closer to 2% is what we've got on the index for the week. You should pull up the MRR. Yep, 2% on the Nifty 50, and the kind of gains that we've seen across the board. Britannia, for one, saw an increment of about 9%. Following that, you've got the likes of Bharat Petroleum. Z did well today in today's session, and over the last week, it's up about 6.5%. Bajaj Finance, Eicher Motors, Pharma as a pocket did well. What didn't do well in Nibbles Housing Finance this week, the announcement of its moving out of the index. Kotak Mahindra Bank, Bharti Airtel, Coal India, Grasim Metals took a little bit shy, and so did Autos, which took a knock in this week.
All right, nearly 2% gains coming in for Nifty. Let's just also pull up the mid-cap index and check how that stacked up for the week. The mid-cap index will come up on your screen. Overall, you did see the recovery, of course, coming by. We highlighted a lot of gainers for you, and there you go, 2% higher even for the Nifty mid-cap index. Oberoi Realty, because of the income tax raid which was going on, the stock did see some bit of beating, but finally some clarification also coming, where they said that they have resumed operations now, so 23% higher for the week. Indian Bank up 20%, and you also had Bombay Burma, Dewan Housing, Escorts, Varroc Engineering. All of these stocks are beaten down, which have rebounded. NBCC was down today, but for the week it's up about 10%. On the losing side, RBL Bank was quite volatile for the week. In fact, on one of the days you did see the stock falling intraday about 17%. Max Financial, India Bulls Venture, and the list actually goes on. JSPL, even the metal stocks were weak. So TVS Motors was the other one, which was down about 3 to 3.5%.
All right, quick closing comments then from our experts. Pritesh, let's start off with you. What are the crucial elements that you're going to be watching out for as we step into next week?
Now see, from the month of August, the takeaway which we can get is that the pullbacks have been extremely short-lived. The one thing is which we have seen throughout is the momentum has been amiss, especially when Nifty has rallied towards the zone of 11,100, 11,200. And if you look at the recent low, and if you calculate the midpoint from this resistance zone, it comes around to 10,050, and it is turning out to be a buying zone. So I think strategy is clear. As and when we rally towards 11,200, it turns out to be a resistance, and at lower levels, we are getting ample opportunity to create fresh longs. So I think that this range is going to be in play for a long period of time. It is not in a hurry to break out this range. I think maybe for next couple of weeks we are going to be part of this range only.
Okay, got that. Brijesh, what about you?
See, as the show started, I said that Nifty would be consolidating, and the consolidation range which I would be looking on a downside would be 10,800 or say 10,820, followed by 11,150 on the higher side, or say 11,200. I think if I'm not mistaken, 11,200 somewhere around the 200 simple moving average lies. So generally it has to be, surpassed, and then only we can say, okay, we have come up from a bearish zone or a consolidation zone and the fresh buying can be emerged. So individual stocks would be outperforming. Now today's session we have seen HUL, Infosys making a new 50-week high. So chances, and Asian Paint, and there are other moves also. So chances are that the stocks, individual stock would be outperforming. As per Nifty is been concerned, still it looked like for the next week, since it would be a short trading session, so it looked like another week of a consolidation phase would be there, and that consolidation range would be somewhere around 10,900 or say 10,850 on the downside, followed by 11,200. But September series, it looked like if we are consolidation in this range, then probability the higher target from my side would be 11,460 to watch if we are surpassing the level of 11,200.
Okay, on that note, Pritesh as well as Brijesh, appreciate both of you joining us today, and have a great extended weekend. Well, with that, it's a wrap on this edition of Countdown. But before we end, a Category 4 Hurricane Dorian is expected to hit the US early Monday, and winds are expected to reach 130 miles per hour. The National Weather Service has described the storm as having an increasing chance of triple threat of dangers for Florida. Take a look.